students, because these are the aspirants who are going to run the country in tomorrow's world. So it's a very privileged situation for me to interact with each one of you, and I can deliver the experience which I am also an MBA graduate. I have been financial. I will try to give you all the details, all the phases that what an MBA student, being an MBA student, you can do in terms of your future perspective. So again, starting from my own background, so I did my MBA in the year of 2012 to 14, and post that I have been associated with financial market as a research analyst. The first company where I have started my career was Carvi, and after that I have joined Anand Rathi as again a senior technical research analyst, and as of now I am with Angel One as senior technical and derivative research analyst. So over the period of 8 years I have gained the informations, and I have gained a kind of all have a thrive of us that we people should understand how to make money in the market and how to get invested, and even how to get multiplied the investment or capital. So my whole webinar for today for you guys will be totally dependent on the practical knowledge, so that you people can get the maximum benefit from a person who was having the same background as you people are. And for you being the MBA, it will be very essential and it will be very important for you to understand the importance of savings, investment, and even the career opportunities that you can see in coming future. So as of now, I will be taking the session towards the importance of capital market, investment banking, and security analysis, because that's my forte. So I will be explaining the things on my forte. And being with you guys, I want this session to be very much interactive, because from the time of a pandemic, we people have started interacting with each other through the internet. So that's the only thing that is challenging also, but that is also a very good point, because we all can connect from our convenient places. So that's a very positive outtake from the pandemic, but still we miss out to have the one-on-one interaction with students. But to be honest, I have taken a lot of sessions in tier 1, tier 2, and tier 3 MBA schools since my past 8 years of experience. And I really like to interact with the students who are having the aspirants, who are the aspirants for the future entrepreneur or future employees. So that's a very positive thing. And I really appreciate you all to get connected on a Saturday to have the lecture on capital market. So this was a brief from my side. And again, I will quote that if you guys will be having any kind of questions, any kind of query related to savings, investment, related to security analysis or capital market, you can still unmute yourself and ask me the questions that you people will be having. So today's session will be having the agenda where I will start with the basics of capital market, where I will be explaining the asset investment classes, different asset investment classes, where you people can invest and can multiply your money, which is very much important in today's world, in today's era, where we are having inflation at a peak high levels. So that's a very important part, because end of the day, all we have to do is to gain maximum profit or to gain maximum revenue, so that our day-to-day life improves, our standard of living can improve, and this can even help for our future generations also. So my today's session will be totally dependent on the capital market, benefits of capital market, but at the same time I will try to highlight all the different where one should keep their hat, so that they should diversify their portfolio, because keeping everything in one equity, one portfolio is something which is having a lot of risk also associated to it. So better to have a diversified portfolio where you can use the debt market, equity market, even the real estates or commodities also. So that will be the today's agenda, followed by the question and answer that you people will be having in terms of career opportunities, also in terms of what you feel like, why you are doing an MBA, and what benefits you are going to take from here onwards. So everything will be trying to cover on this webinar. So I will be starting with the webinar with the basic information that I guess being a MBA students, you all must be knowing that savings and investment are having the major role in our life. So because we people, the end product that we people are going to do is to earn money, and that's the main agenda. That's very important for us, because earning money is something where you can meet the goals that you people will be having, because you people or everybody will be having some kind of goal, some kind of perspective associated to their life. So it is very much important that how we take our career and how we take the maximum from our career, so that we people can make maximum benefit from here onwards. And then how can we multiply the same revenue, because from here onwards you will be onboarding some MNCs, some IT companies, some marketing sales companies. So that will be very much important for you to understand. Ram Prakash, I guess your audio is on, so better can you please put yourself in mute? Thank you. So in case if you people will be having any questions in between, so you can unmute yourself, ask me there only. I will try to rectify, I will try to answer all the queries related to financial markets. Correct? So today on from now onwards, I am just simply going towards the financial market, the basic of financial market, that where one person should invest upon. Yes, sir.
Mr. Osho, there's I think small issue. The network visibility is not there from your side. Can you please see the bandwidth, whether it's fine? Or visible.
Is
audio
it visible? Because from...
No, it's not visible. Audio is better now, but yeah, now it's visible. Yes, good. It's visible.
Okay.
Yeah, thank you. Thank
okay.
you. Thank you.
Welcome, sir. With sir, I am having a long corporate relation, because when I started my career, I have came to sir for the interactions, for the seminars in his college. So it's been a long relation with sir, and he has invited me again so that you people can get maximum from my practical world, that what I have gained through these many years. So starting from the first thing that I will try to showcase on a PPT, that the importance of financial market and how many asset investment classes are there available, so that you people can invest and even can look forward for multiplication in your capital. Correct. So I'll be sharing the screen. Just do let me know that whether it is visible or not. Once a second. Is it visible to everyone?
Yes, sir.
Okay. Okay, thank you. See, in general, if I'll be concluding the overall umbrella of investment, then the overall umbrella consists of BFSI segment. BFSI segment is something that is related to banking, financial services, and insurance. So this is the main criteria. This is the main parameter where we can have the maximum number of investment. Because if I'll be explaining some of the examples of BFSI, then BFSI will be including your RD, which is the most conventional method of investment in any of the financial market. So FD, RD, insurance, taking loans, these things are something which are related to the BFSI sector. The another sector is real estate. The second one is real estate, where one can invest in physical real estate, or in plots or land, home, flats, n number of things. And from there we can see a multiplication in the in your capital. Third will be commodities. Commodities, basically from commodities, I basically mean that bullion market is something where one can look for investment, and bullion is something which is very much attractive also. And bullions, what I consider is gold and silver. So gold and silver are the market where one invests their money both in physical format or in ETF, and it get multiplied over a period of time. And the last one is equity market. Equity market, where you can have diversification from derivative market, cash market, and future market. So that will be taken care at the last. But initially, I will try to cover all the asset investment classes based on some parameters. Because at end of the day, first thing that you have to do is to beat the inflation. And today's India's inflation is near about 6 to 7%. And looking at the overall GDP growth, then it is near about 6.5%. That means a regular investment that is churning or that is giving approximately 6 to 7% of return won't suffice the inflation rate. So we have to invest somewhere where we can get more than 7% of return, correct? So from here onwards, we are going to see a diversification, a kind of parameters where we can invest and how much returns we can expect based on how much capital, taxation, everything related about asset investment BFSI, commodity, real estate, and equity market. So as I have explained, BFSI consists of your FDs, RDs, bonds, corporate bonds, government securities, your PPF, your insurance. So major of the things that we people are aware from the previous generation are from the BFSI sector, because all of us would be knowing FD. But how much return a FD gives? It is approximately 5.5% per year per annum. So we have to see how we can diversify our portfolio so that our risk will get minimized and our profit gets maximized. So from here onwards, we will be explaining on the diversification, that what are the importance of different asset investment class and what are the parameters on which we are going to evaluate each one of the asset investment class. The first parameter that you can see is capital requirement. So in BFSI sector, the first, because we being the starting of our career, for you guys, it will be very much difficult to secure or to categorize one portion as savings, one portion as investment and expenses, because nowadays expenses have become very huge. And even the basic phone, the iPhone is approximately a lakh rupee, which is not cheap, correct? So in general, people should understand that how much capital is required in which kind of category and how much of returns can we generate from it. For BFSI, the minimum capital requirement will be near about 500 rupee. Yes, you can invest from 500 rupee and it can get multiplied over a period of time from 5 to 6% per annum on your FD and RDs. But again, if whether 5 to 6% is going to suffice your inflation, the answer will be no. So that's why we need to see the corporate bonds. Now, corporate bonds, what are these corporate bonds? In general, whenever a private limited company need some kind of cash or capital, they go for a bonds. They go to the bond market. In bond market, we all know that there will be some kind of fixed return, that over 1 year I will be giving you a return of, let's say, 8 to 10%. So that is decently high enough from the rates of FD. So corporate bonds are also which are associated with the BFSI sector. The third one is the government security. The government security, as we all know, that it is one of the safest haven where our capital is going to get safeguarded, that whatever happens in the world, at least my capital will be there at whatever time I require. Then the PPF, which will be having a decent return of 7.5%. And the main agenda, the last one, is insurance. Insurance being one of the very underdog, because here we can see a lot of premium is getting eroded. We have to pay a lot of a premium for the insurance, but this is the company where we can safeguard our own future. And once we have our future protected, then we can take a lot of risk also. So insurance is being a very strong company, but very competitive market in the insurance companies. The second parameter is how much rate of return will be expected. So as I told you, in BFSI overall, starting from 5% and maximum towards 9 or 10% kind of a return you can expect from BFSI sector. The risk associated with BFSI will be very low, because from here onwards, at least the capital will be safeguarded from any kind of volatility in the market. So risk associated in BFSI sector will be very less, and the time frame what we people can expect, that in how many days or years we can expect a decent return. So there is two terms, STCG and LTCG. STCG is short term capital gain, LTCG is long term capital gain. So anything beyond 1 year comes to LTCG, and anything below 1 year come to STCG. So as per the taxation of the individual person, the taxation applies on the returns of the BFSI. So approximately for STCG, it is near about 15%, and LTCG, it is near about 10%. So that much of taxation you have to taxation you have to provide over a period of time, or below 1 year 15% and above 1 year 10%. So that's BFSI sector, but BFSI is one of the safest. Again, I am explaining this. Why? Because here your capital is fully protected. Now again, because the returns are decent enough, 5 to 7%, but hardly meeting the inflation. The inflation is near about 7% in today's world. So we have to take care of some investment where we can get enough money, enough return, so that we can overtake the at least the inflation rate. So second pointer comes as a commodity market. In commodity market, we all must be knowing the rate of gold and silver in today's world. So gold is trading near about 54,000 10 grams, and silver is near to, I guess, 30,000. So mostly what we can see that the prices of bullion market, the prices of gold and silver, they have on a very stagnation phase. And pre-pandemic, the even the returns on bullion market was quite low, because if you will see from the BFSI comparisons from BFSI sector, it was on the same scale. It was giving a return of near to 6 to 7%. But after the pandemic, the returns for bullion market have drastically improved. From there onwards till now, the bullion market has nearly moved towards 25 to 35% of returns in 2 years. So overall, if we will look for the longer period, then average returns is near about 8 to 9%. And short term perspective, they have given a very good, tremendous kind of a return in 2 years of nearly 25, 35 to 40%. So that's a very good market where one can look for invest. And as we all have, because we people have physical gold also, and we people keep ETF also. So that's a very positive take for Indian citizen, because we people always invest in gold, rather market is going up or low, irrespective. Why? Because we have a ritual of buying gold in our traditional life. So on the basis of capital requirement for bullion market is quite big as compared to BFSI, because from BFSI, my minimum capital requirement was 500. But here onwards, if you want to buy at least a 5 gram, 10 gram, even 1 gram of gold, then you have to invest minimum of approximately 5,000, 5,500 rupee. So the capital requirement for bullion has improved from what the minimum capital requirement I'm saying. The minimum capital requirement has been slightly higher from the BFSI sector. Rate of return is again 8 to 10%. Risk associated in bullion market, yes, because of the volatility, risk is there in bullion market. But over a period of time, if we will do the back data analysis, then again the risk associated to bullion market will be very minimal. Why? Because it has been appreciating always. There has been no depreciation. Yes, it depreciates on some year basis, but that is negligible. Over a longer period of time, if you will see, then pre-pandemic it was 5-6%, and post-pandemic it is 35%. The time frame that we people should invest in bullion market is again a subjective topic, because here we don't have STCG or LTCG. The time you invest, that the longer duration you will be having, because on the data analysis basis, the more returns you can expect from the commodity market. Now coming to the third part, which is the real estate, where we can have our own house, flat, plots, commercial buildings, so where we can invest a lot of money. But the main challenging part in real estate is the minimum capital requirement, because if I have to invest in capital in the real estate, the minimum capital requirement will be 20% of the value. So even if the house, flat, whatever it is, if it is having a value of, let's say, 1 crore, so you have to give the capital, deploy the capital of nearly 20 lakh, which is a very huge amount as compared to BFSI and commodity market. BFSI 500, commodity 5,000, and real estate is 20 lakh. So this is the only challenging factor in real estate, where we have to invest approximately 20-25 lakh at the very starting. Even if you are going on a higher end, then it will be even higher. So capital requirement is the only drawback for real estate, but then we have to see the rate of return. So as per the RERA, every 4 years your capital gets multiplied by 2, as depending on the geological presence. But again, that is very subjective, because many of the locations will be having even higher rates, many of the locations will be having lesser rate. But overall, if we will average out everything, then the rate of return for every year, because in 4 years, if it is getting 100%, so every year there will be approximately 18 to 20% of returns. Why? Because it will be having a compounding effect. So every year, if there will be 18 to 20% of return that we can expect from real estate, so that will be compounding on every year to year wise. That's why we can see in 4 years, the 18% of return can exceed towards 100%. Risk associated to real estate, yes, there has been a lot of risk associated, because then the term from the MBA that comes into picture is pastel analysis. PESTEL, pastel analysis. In pastel analysis, we have to see the political, economical, technological, sociological, so that whatever happens in near around area, we have to keep analyzing those data, and accordingly the property rates are going to increase or decrease, because we all must be knowing that whenever there is some kind of positive infra construction near the real estate, the property rate skydives, correct? And when there is something negative with the surroundings, then the property rate also corrects. And coming to the taxation purpose, taxation in real estate is something which is either 10% or 10% on a basis of calculating your interest rate from the previous when you have bought it, or 20% on the selling price whenever you are selling it. So taxation for real estate is again very simple, because either if you have, let's say if you have bought it 10 years back and you are selling it right now, so we will be calculating that at 10 before 10 years how much was the currency and how much it has appreciated, and on that price, on that price we will be calculating 10% of tax. Either there is the another option where you, the selling price, whatever is the selling price, you have to pay 20% at front. So these are some of the asset investment class where we all invest. Now comes the part of equity market. Equity market being one of the major leader in generating revenue, in generating rate of return. Why? Because equity market is something which has its dependency on the GDP of the country, because major of the companies which contribute to the GDP of the company are listed in equity market. So that if we will see Adani, if we will see Reliance, if we will see ONGC, power sector, infra, L&T, so major of the companies which are building the country, which are having their exports, imports, IT sectors, pharma sector. So all these companies which are having their day-to-day run in the to a day-to-day activity to run the country, and even out even abroad. So those companies are listed in equity market. So if we people can invest in those company, how much returns we can expect. So equity consists of your basically stock, the companies which are listed, security market. Second is primary market, which will be having direct IPOs, FPOs, so that those companies which are coming very early, those companies which are coming for the capital requirement, those company comes in the primary market. And once the company get listed, they goes into secondary market where we people can buy and sell the shares. And the fourth point will be the ETF. ETF is involved in everything. If you will see the mutual funds will be having tranches in BFSI, commodity, real estate, and equity. So even if we will go through all the asset investment class, the mutual fund and the systematic investment planning will be the best initial investment that one person can have, because that will generate you good returns. And irrespective where the market goes, which companies to get how much of weightage in your portfolio, everything will be managed by your experienced fund manager. So initially SIP will be the first thing that you people should understand and should start your career of investment with. And apart from it, once you gain the information, once you gain the knowledge about market, then you can directly jump into the equity. Because capital requirement, again going through the parameters for evaluation, capital requirement for equity market is quite low, because you can buy even 10 rupee share also, and you can even buy 10,000 rupee share also. So it totally depends on your pocket size. Equity market is always open for every kind of retail investor. Second, how much rate of returns can we expect from equity market? So looking pre-pandemic data, then approximately 18 to 22% of annual returns have been seen in equity market. In 2020, when the market corrected, but again, we have seen that from the month of September, August and September, market have started moving upwards and it has recovered all the losses that it has made in the initial phase of the year. So even post-pandemic also, if we will see, then the returns are not very huge, but approximately 7 to 8% of returns that we can see. So overall, if we will see on the longer period, then longer period, the rate of returns for equity market is near about 16 to 20%. Second, the third point is how much risk is associated. So risk association in equity market is very huge. Why? Because in the volatility, in whenever there is any kind of turbulence or volatility in the market, geopolitical tensions, or the conflict between Russia and Ukraine recently, that has impacted a lot on the equity shares. So equity shares have nosedived from the higher zone towards and corrected nearly 12 to 13% in this calendar year. But again, from there onwards, what we have seen that from August, the market has recouped from the bottom and again is going on a higher end. So risk association in equity market is quite high, but if you are invested in good companies, then you don't have to worry about the investment that you have done, because over a period of time to recoup the GDP of the country, the good companies, the fundamentally sound companies, that will be backing a lot of movement in the equity market. Then how much time frame is required? So as I mentioned that in this also we will be having HTCG and LTCG. Short-term capital gain will be associating with below 1 year of investment, that will attract 15% of investment and 15% of return, sorry. And LTCG is long-term capital gain, which will be above 1 year of investment, and it will attract 10% of your interest, how whatever you have earned. The third part is the last part is taxation. So taxation is also HTCG 15%, LTCG 10%. So in general, what we have to see, what we have to look, that all the investment, all the saving opportunities are related to majorly these four asset investment classes. Now we people have to think that our own capital, our own, let's say, salary should be divided. How much weightage should be given to BFSI, how much weightage should be given to commodity, how much weightage should be given to real estate, and how much weightage should be given to equity market. And accordingly, we have to invest our savings so that for future requirement, the returns that we have seen in real estate and equity market, which is very much higher as compared to BFSI and commodity market, because BFSI was 5 to 10%, commodity is near about 10%, but real estate and equity market is giving you a return of nearly 16 to 20% per annum. So these are decisively very strong as compared to in terms of returns as compared to BFSI sector and even commodity sector. But at the same time, we have to go through all the parameters, that what are the parameters, how much risk will be associated, which company should we invest upon. So majorly we have to do all the back data analysis, all the back data research, and then we should invest in equity market. So now, as I have explained a lot about the asset investment classes, now I will directly jump into the equity market, because that's the forte, that's my forte. And I will be trying to explain you guys that what are the basic things that we people should understand in equity market, and what are the things that we will be seeing on the basis of fundamental, on the basis of technical, and on the basis of derivative. And being the MBA guys, you people would also be having a subject called security analysis. So major of the portion of your security analysis will be taken care in today's webinar, and post that, whenever you will be having the classes of security analysis, then it will be very much easier for you to understand the main concept, because I'm not going to explain you the theoretical part, because that's obviously you will be having faculty members who are much more experienced than what I am. But I can explain you the practical aspect, that how you can see the technical research, how you can see the derivative research, and what are the various parameters that you can see for your day-to-day life in equity market. And being the MBA person, because MBA gives you a lot of information that how you should invest irrespective of whatever is your domain. Either it be marketing, operations, HR, or finance. These things everybody should understand. Why? Because end product is again churning money, making money. So you should know how to make how to make good amount of money in equity market, and from what are the things from where you can invest and where you can get good decent returns from the asset investment class. So this is the main hierarchy of equity market, where one can see that at higher end, because there is a regulator for everything. So for equity market, the regulator is SEBI. SEBI is the main regulator, where we can see that it traces out what are the actions are happening in equity market, who is buying the share, who is, if there is any kind of loophole that can be taken care of. So this is kind of the dean of the equity market, which takes care of everything being at top of the pyramid. Second is the exchanges. So in India, overall, there are two national exchanges and nearly 18 local exchanges. But major of the volumes happen on the national exchange, which is NSE and BSE. Even NSE is having higher liquidity, higher volumes, higher attraction because of the technological advancement from BSE. So NSE is the exchange where we can see a lot of participations of traders or investors also. So this will be lying at the second position on the pyramid, followed by the depositories. So depository is only CDSL and NSDL. CDSL is the depository for BSE and NSDL is the depository body for NSE. Now, what does a depository means? Depository is something like your savings bank account, correct? Savings bank account where you can keep your hard-earned money and it stays there for whatever period of time. The same way is the depository body. Whatever financial instruments you are buying, equity, commodity, BFSI, FDs, RDs, anything, those will be taken care by the depository body. So for NSE, there will be CDSL, for NSDL, and for BSE, that will be CDSL. And after depository comes the depository participants, that we also call as DPs. So companies like Angel One, my company, ICICI Security, Motilal Oswal, Anand Rathi, these companies are the depository participants, which are the bridge between the customer and the exchanges. Because being a customer, you cannot directly approach the exchange for buying and selling of any of the security. So these people, depository participants, are the person who take care of all the transactions, that what you people are going to buy, or at what price, what quantity, and then on your behalf they will be doing all the transaction with the exchanges. So that means being a customer, for me, I will be only knowing the DPs, and for exchanges they will be also knowing the DPs. For exchange, they does not know who the end customer is. They only know if this much of quantity has been bought from Angel One, so I will be giving this much of quantity to Angel One, and I will receive this much of quantity from Angel One. Now it's Angel One which is going to give that much of quantity to the customer, and customer is the person who is going to give that much of amount to the depository participant. So this is the hierarchy that we all should understand, because from the higher level to lower level, we people lie at the bottom of the pyramid, we people being the customer. So we should understand that what is the hierarchy and what we people have to go through, because we in general we just know the DPs, and DPs will be taking care of all the transactions that you people will be having. So this was the basic about financial market, that how financial market works. Now I will be moving towards the research part, that what kind of analysis you people will be interested in, what kind of analysis you people can do or see in your day-to-day life for investment perspective or trading perspective in equity market. Meanwhile, if you guys have any question, you can ask me just now. Any one of you. No one?
Osho, maybe you could give them some inputs about the terminologies, maybe they are not familiar yet. Maybe you can give them some kind of Angel One, kind of those things.
Okay.
Little more explanation will help them understand better, I guess, because they are still learning, the first part.
Okay. So in general, what I have explained is SEBI is the main authority person who takes care of all the transactions, all the things that are taking place on the stock exchange level, correct? Second is the exchanges like NSE, BSE, whose main corporate office is present in Mumbai. So those people will be taking care of. This is basically a marketplace where a person can buy share and they can give cash, correct, or they can give currency. Transactions happen. So this is the marketplace, secondary market, where people buy or sell securities, and on that behalf, that is taken care, the thing, whatever financial instruments which you have bought, that is taken care by the depository. Depository is again kind of a bank which is having savings account. So you, whatever investment, whatever money you have invested or kept in your saving account is stays with the banks, correct? Same way, whatever for financial instruments you have bought, your RD, FD, stocks, so these things will be taken care by the depository bodies, CDSL and NSDL. And to do all these transactions, you need a person, because exchanges does not know who is Osho Krishan, how I can approach exchange to buy or sell any kind of share. So in between, to fill the gap, there is a person called depository participant. So depository participants, they on our behalf, they on the behalf of customer, they buy the share, they sell the share with exchanges at the marketplace, and then they execute that kind of transactions with us, so that we people can get our own uh, so sorry, we people can get our own quantity, our own securities. And meanwhile, those people, whatever exchanges cash has happened, so that can be viewed as a, that can be taken care by the exchanges through the depository participants. So now I assume that you people will be aware or must have heard the term called trading, investment, stock market, because that is something which is very much uh, aggressive from past 5 6 years, because the market has been doing really very well. So there are many influencers, YouTubers, even people on Twitter also, and even people come on television also to explain the importance of investment in equity market. So you must have heard something about the term called Nifty or Sensex, correct? So Nifty is basically the index that is comprising 50 top companies of NSE, and BSE is having its index called Sensex, which will be comprising 30 companies. So whatever evaluation, like you people, and let's say you people are belong to one classroom. So if I have to evaluate the total performance of the whole classroom, I will be saying that this batch is having a average mark marks scored is of, let's say, 80%, correct? So that means I have average out all the students marks. Some people will be making 90%, some person will be making, let's say, 70%, some will be 65%. But to engage that, but to say that overall the batch has scored 80% marks in this year. So that's how even exchanges does their work, because exchanges will be having approximately let's say exchanges will be having, there will be companies like Reliance, Adani Ports, Adani Entertainment, Infosys, TCS, Maruti, Hero Moto. So all these companies will be having certain kind of returns. Some company will give you 14% return, some will give you 20%, some will give you even 8%. So I have to evaluate on what basis I am going to judge what is the total returns that we have seen in this financial year. So for that, we have created, the exchanges have created the index. For NSE, it is Nifty 50. Why 50? Because it consists of top 50 companies which have their very strong presence in development of the country. That means their performance, their top revenue is directly linked with the growth, GDP of the company. That if Reliance is doing pretty well, if companies like Bharti Airtel, Reliance are introducing 5G, so how it is going to impact the GDP of the company. But if it is a very positive thing, then obviously the stock prices should also move upwards. So what we can see, that the prices of Reliance are moving higher side, correct? Just for you guys to have a clear view, I'm sharing the screen with the technical chart so that you people can understand that how we people do our own analysis, I hope this chart is clear to visible to everyone. Anyone can reply. Is it visible?
It's loading, sir.
It's loading. Okay.
Still, it's loading actually. Can you please share it again, Mr. Osho?
Okay, sure. I will. Visible?
Yeah, it's visible now. Yes.
Yes, sir.
Okay. So this we people can see that this is the chart of Nifty 50. Here onwards on the uh, left top corner, we can see the name Nifty 50, and this is the overall chart pattern. So this is what we people are very much dependent, that what happens to the stock prices, what happens to the equity shares. So this is a very strong software which reflects the overall prices, that what are the prices for a stock market, and how we are going to have our own analysis. So there are various technical tools that we people can introduce, and then we can see that how much retracement this fall has seen, and how much higher expectation that we can see from here onwards. So this is the overall uh, daily chart, daily movement of Nifty. Here also we can see what will be the weekly movement, what will be the monthly movement, and what will be the yearly movement. So as we have seen that from this is the yearly candle of Nifty 50. So we have seen that from this level, 8,000 odd levels, the market has always been on the uptrend. It has higher highs, higher highs, higher highs. So that means overall the primary trend for equity market is very bullish. So this is the kind of representation that we people should take, that what however long, if your duration is very long, then the kind of returns that you can see is also very healthy. But for shorter duration, if I will invest in for shorter duration, let's say this is the daily chart, and I wanted to invest somewhere over here on January 22, and again I exited my position, let's say in Feb. So that will be a negative return for me that I can see from the market. But if I will see the overall longer duration, the market is always in an uptrend from higher times. If we will see yearly returns, then yearly returns has always been very positive. Then again, for example, if I will say Reliance, or let's say Adani, see this is the daily chart of Adani. So in shorter duration, we can see that there is a correction from 3,800 to till 3,200. So there is approximately 600 point of erosion in a counter of 4,000. So near about 10% of erosion has been seen in Adani Port in short duration. But if we will see the longer period, longer duration, this is the, let's say, yearly chart, then we can see that how strongly it has moved in just 2 years, from 600 to 1,600 in 1 year, and from 1,600 till 3,200 in the another year. So this is how we people have to look for analysis and research, that the longer duration you spend on the market, the higher returns we can expect from the market. And how to gauge such kind of movement is something that is very much dependent on the technical analysis. For example, this is one of the chart where we have seen a very strong breakout. So if we will see, this is Sun TV, correct? So from Sun TV, we have seen that currently it is trading around 540, but from the levels of 490, it has seen a very U-turn, a kind of a V-shaped recovery we can see from Sun TV. So from here onwards, we can expect, because these are the major hurdles, main resistance, where the supply zone increases. Supply zone as in people start to sell off their shares once it reaches to near about 520 zone. So once it breaches 520 zone on a decisive manner, that means people have seen that the resistance has been broken from here onwards, and from here onwards we can expect the market to even move further. Then we have to gauge the momentum in the market, because as of we all know that as of now the festival season is about to come, so people will be having a lot of consumption in many on the consumer durables, gold related companies. So if we will see Titan has seen a strong movement from the levels of 1900. Why? Only on the expectation that we people will be having strong consumption data in the month of October till December or till February, because there is a wedding season also. So this will be having a direct impact in the counters which are related to those kind of seasonal product. So if we will see Titan from 1900 levels, it has directly started moving upwards, and now it is at lifetime high zone. So from here onwards also we are expecting that the festive season has just begun. From here again 3-4 months of festivities will continue. So again we can see a strong move from here onwards. So this is not a recommendation for you guys. Don't just buy these shares on Monday. But I just wanted to explain you that why there is so much of positive returns, and how whatever longer duration we spend in the market, the very strong returns we can generate from equity market. We just have to gauge a proper research that at what time we people should enter the market, what should be the technical aspect, technical analysis that we people can focus, and accordingly we can invest or we can even trade in equity markets, because people in equity market makes thousands and lakhs of money in a day also. So you have to take care that how we people can do the same. If I have to, but this will happen over a period of time. This won't be happen on a very first day. For the first day initially, which I have told you, that SIP, systematic investment planning, is the best tool for freshers or just who have started earning, because that will be taken care by the fund manager who are having the very strong expertise in the market. Once you gain expertise over a period of time, then you can take care of your own portfolio also. But till the time you don't have expertise, don't just jump into the conclusion because Mr. So and so have said anything to you. I again tell you, this is not a recommendation that Titan you should buy. I'm just saying that why the reason behind the movement from 1900 to 2700 levels. So that is approximately, if you will see, so 2000 to 27 is near about 40-45% of returns that we have seen in just from July till now. So that's a very positive take. But again, timing the market is difficult. From when the movement will come, that will be very much difficult. So that's why we people, this is our forte, that we people analyze that on what basis we can analyze that at what price one should enter in the company and at what price one should get exit also. Because let's say from here onwards, if I will say in January 2022, this was the high near about 2700 only. Then again it retested the same in the month of March, and then again it has fallen down. So those people who have invested in the month of January, for them the company has been in a downtrend. Abhi, after I guess 7-8 months, they are coming at par with what they have bought. So it is very much important that at what time you should invest and at what time you should exit. Because looking at again the previous highs, because as I mentioned that festivities are there, so we are expecting a positive movement. So we can see 2700 or 27 near about 2700 is being the resistance. Why? Because people here are very much uh, not very much optimistic, because they have started increasing the supply zone, because this has been tested once, twice, thrice, 4 times, and this is the fifth attempt that this stock is giving at 2700. So if it breaks this convincingly this time, then we can see the rally to continue. But again, looking at the overall period of time, we have seen this to be a very strong resistance. So it might fall from here also, and even if it closes above, let's say 2800, then we can see a strong rally in this counter also. So this is how we people have to analyze depending on the back data, because if I won't see the back data, then it will be very much difficult for me to analyze that whether I should buy this counter right now or I should wait for some other levels. So that's why these levels I have seen ki once, twice, thrice, 4 times, and fifth time this level is coming. So if it breaches now, then we can see a strong move. If it won't, then again the stock can go into consolidation. So that's why analyzing the back data is very much important whenever you do the research. Because in technical analysis, there is a term called price discounts everything. That means whatever is the fundamental of the company, whatever is the seasonal product, whatever is happening in the market. But if the price is moving upwards, 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 so that's a very positive take for from the counter. So price discounts everything. You will stop seeing any of the data, any of the fundamental aspect. So that's a very wrong thing, because you have to keep analyzing, because it's your hard-earned money. Just don't invest anything on the saying of anyone else. So invest accordingly with a proper research, that why I should invest at this price and where I should also exit also. Because if you don't exit on time, then again the duration for your stock is also is going to fail or fall. But over a period of time, if you have an investment kind of perspective, then stay invested in strong fundamental companies, those companies which generate the top lines, generate directly to the GDP of the country. Those companies are going to have a very strong potential for even for coming period. Like for example, if I will say Reliance, because Reliance, Adani, these companies are majorly into hot picks because of who's the world richest, India's richest. So everybody knows about these companies. But if we will see the overall trend of Reliance, then we can see it has always been on higher highs, higher highs, higher highs. Once in 2020, again, the dip came because of the COVID, but again, it has recouped very strongly and started moving upwards. So we can see from 2017, the prices was nearly 600 rupees, and now 2500. So that means just in five 5 year of time frame, your company has given you more than 500% of return. So that's a very positive feedback that we can see in equity market. So that's why we people stay educate or aware measure of the clients or students, or you being the main aspirant for future development of the country. So I would suggest you to take a proper look, take a proper research on the things that you people can see, and try to maximize the opportunities. That why you should invest the early you stage, the maximum you can do make profit in a higher duration. Because if you will be investing after you if you will start investing after 10 years, then again the profit of these 10 years will be lacking for you guys. So I would suggest that the time you start earning, the first thing, whatever you do from the first salary, do make sure that from the second salary you start your SIPs in strong companies that has been taken care by good fund managers. So that at least after 5-10 years, when you look back at the time of investment, you will be seeing a very decent returns, and you will even beat the inflation rate. That won't impact you from there onwards. So whatever happens to the inflation is whether high, low, very high, it won't matter to you once you start investing through SIPs. And once you get the nerve of market, then you can directly go to the direct markets from your own onwards. So this was it from the technical charts that I wanted to explain. Now I will be explaining you on towards the technical perspective and the fundamental perspective, that what you people have to look for in investment companies, and that why you people have to do investment in so and so companies. So till now, if you guys have any questions, you can ask me now. Anyone?
Sir, good morning.
Yeah, good morning.
Sir, what are the qualities required to be success in capital marketing?
Can you please repeat?
Sir, what are the qualities required to be success in capital marketing?
If I will say about the quality to be successful in equity market, then it's a very again, the longer duration you spend in studying equity market, that will be the first thing. Because you can never see a young person in equity market that is having a very strong presence, because people are having most more experience people can get from by staying in the market, because there will be ups and downs in the market. There will be a number of things that will keep happening. Like as of now, if we will see Russia, Ukraine, then weakening of INR, global recession. So there will be a number of things that you people will keep on learning. But the most important part that you just cannot skip these things. You should always be very much affirmative. You should always be very much ready with all the informations. Keep learning, keep studying about, even not from the technical or fundamental aspect if you are not in the field, but also from the world of, so that you can see the current affairs, that what are the current affairs, what is the RBI monetary policy is all about, what is Fed rate hike means, what are the global concerns that is going on, because depending on that there will be a number of things that will be dependent on the performance of equity market. So you have to be open minded throughout, keep reading, keep analyzing, and always have to be in search of why I should invest. Before that, always think upon it, do a back data research, do a fundamental research, technical research, and accordingly put your money in any kind of stock for investments. Second point, what you should do for becoming successful is, there will be n number of books available. Try to read anything related to corporate learnings. Start accumulating books, because I have a series of books lying over here. So there will be n number of things that will be learning from n number of books, not related only to the, either on the spiritual side or either on the entertainment side. You can learn from corporate books, you can learn from business leaders. Try to read business leaders, try to follow good people on LinkedIn, Twitter, YouTube, because many of the things, because now things have been very convenient. You don't have to even read by yourself. YouTube or even MS Office will do it for yourself. So that is something where you can have it, where you can invest your time as of now. So for me, what I can suggest, to invest in yourself, invest in your knowledge for the time being, for next 5 years, and keep reading even after that also, because we people have to do the same thing. But after a period of, let's say, 10-15 years, you can see a lot of improvement. You being a successful entrepreneur or employee, or whatever field you choose, you can see a success in your own character.